Hello everyone, in this video I'm gonna show you how you could have made $1,800 just trading on margin, selling naked puts on tasty trades and the trades that are available as of today. So let's get to it. Now if you watched my last video, my first video on this channel, we have a trading plan on tasty trade. Okay, link below to join. Step 1, we got 8 steps that I go over on a daily basis. The step 1 is to sell 2 to 8 ATR puts on forever stocks based on watch list 20 per day. Now I showed you the basic about Apple trade to generate like $100 in the last trade. Go check it out, last video. But I want to show you what you could have done. So if you go to the Excel, okay, I'm on my forever portfolio number 3 for put option, and I did the first two, Colgate, ticker symbol CL, and DLTR $3. I'm gonna show you why in a second. Now the goal for me when I'm thinking about doing trades in a portfolio margin account is to generate at least $200 right here for per trade. If it's 100, it's not really worth it. You do like 100 a month, that's 10,000, but one trade goes sideways and you're down $4,000. It happens with Umera last month when I had like the 265 puts. It was at 320, that was 8 ATR, and it went from like 315 to like 215, something like that. That's a big hit. So you see we got 200 in here, 500 here, 370, 250, 300, 250, 800, 250. So I'm gonna show you those trades except this one, the Microsoft, because the Microsoft one is for, you see here, December 19, 2025. So that's like selling deep in the money puts, and it ties a lot of buying power, unless you have a portfolio margin, which is the main goal for me. To reach a portfolio margin, you need $175,000 in a tasty trade account, and then you need to apply, and then they need to approve you. I'm not there yet, but that's the goal for the next 12 months. So step 1, I'm gonna show you, as I said, sell 2 to 8. I just follow my sticky note. Sell 2 to 8 ATR puts on forever stock based on watch list. I went here, I'm on forever watch list number 3. I'm gonna click, instead of looking, I'm gonna click on CL. This is the trade. CL is the trade, okay, and this is what happens. CL, the price is 96, and the trade itself is the naked put 90, which is 7% out of the money. Collect $200 for free contracts with $5 decay, theta decay per day, $8,000 buying power. So let me show you how it looks in real life. I haven't done it, I'm just showing you what's possible. So you go here, okay, and now it's 195, same price. It doesn't change too much. Again, we got earnings. Basically, once the earning doesn't say, so it's probably in like 2 months, or they already posted, and it's like at the end cycle, or there's still time for earnings. So the price today is 96. Now why I'm showing you this, because 1.54, you see the ATR, that's the only metrics that matters to me. Not if the technical, doesn't matter, up, down, up, down. You see we're in the middle of the range with an 8 Kettler channels. I did the 8. I didn't do 2. I did 8 standard deviation instead of 2, like 4 times the worst case. And if it goes here to like 85, yeah, it's a great buy. So 1.54, if you take this is how I do the daily work. 154 times 8, that's 8 ATR. That's $12, which is 85. Now the 85 was a little with no premium. You see here 25, 35. It's not a lot of premium, so I went for the 90. I like to get at least 50 cents, which is $50, and at least $200. If it's less than $200, this is like exactly 200, 195. It's fine. Then basically, and you don't have to do this trade. I'm just showing you from what I've done for the day, how you can also collect $1,800, something like that. Okay, the buying power affected is a lot, 8,100. But if you do this trade, free, sell free Colgate $90 puts for December 20, you can collect today $195. Theta decay of $5 a day, $497. 83% chance that it will expire worthless. See the chart, it already went down from 102 to like 95, and we are here. We did a little jump. Yeah, that's basically it. So that's one option to consider. The next one for the day that gave almost $500, look at this, 488, was DLTR, $3, okay, and price 66, and the put that you can consider is 50, which is almost 33% down from where it is now. How crazy is this? 33% down is a lot. Okay, now they had earning before last time, and they dropped from 90 to like 65, which is a big drop, and now they're still 65. I haven't done nothing for like 2 months, and now I assume there's more earnings. If they drop another 30%, that's a big drop. That's like a 50% drop in 6 months. Yeah, maybe it's a good time to get a sign. If you're not, you have 33% buffer. And look at this, 4 contracts for $8,000 buying power, and gives you $500 today, $488 today. So let me show you how this trade look like. If you take the trade, you go to DLTR. It's gonna find it in a second. DLTR, why is it not finding it? Okay, interesting. Let me see. So you see here, DLTR as of now, price today, $66.44. You see it went. If you go, I don't know if you can go even more, but the chart, it went down a lot. I don't care about the chart, I care about the ATR. Now this is interesting. Look at this. We are here. Look at the graph. It's already more than 8 times the Kettler channels, super undervalued compared to just rubber band. That's it. Rubber band theory means that it needs to go back to the basically the middle point or mean reversal. Yeah, this is insane. Now this is also insane. IVR, look at this. IVR 107. Now there's a sticky note here that says that's next. Tasty IVR, sell 88 ATR puts over 100 IVR. Okay, and high liquidity also, and here change of 10%, 8 ATR. So basically, if the IVR goes up above 50, that means that the options are getting expensive. That means there's probably a reason for that, but that means that there's a good chance that you will collect more premium selling. Okay, so over 50. This is more than 50. This is 117. This is absolutely insane. Okay, absolutely insane. Over 100 IVR, a lot of premium to collect, and this is why. And the ATR is 277 per day. So if you do 277 average per day move, so about $3 move per day on average for the last 14 days, 277 times 14 gives you 38, $40. Now $40 is a lot, okay, but if and because I went here, $40 will put you at like 35. This one, okay, it's not a lot. 11 cents, 20 cents. As I said, I like to collect more. I like to collect more than 50. I could have gone for this one for the 45 if you wish. There's good liquidity, 67.70 on the bid ask. But the 50, you know, it's a round number. People will say, oh, round number, maybe I'll put a limit order at 50. You know, that's how people think. That's why if you do this and you do 4, why 4? Because I have a limit in my head of, let's say you have, for example, 100K. In Tastyworks, with the margin, it's 200K total buying power. Okay, not a financial advice, not telling you what to do. But I put in my head around 20K per trade. Trade small, trade often. If I have a portfolio margin account, that's a different story. But at 50 times 100, that's 5,000. 4 contracts is basically 20,000, and you collect 492 around the price that you can get. It's just on the Excel. Buying power affected $8,000. Okay, this is interesting. Yeah, that's it. This is the beauty. The theta decay $13.8. Remember the other one? Where's the other one? Let me show you. The other one that we did, what did we do just now? Colgate was a little more stable, $5 a day, but Dollar Tree, $13.71 per day. You can set yourself some rules and say, you know what, my capital is limited. If I'm gonna do this, I'm just gonna focus on stocks that have $10 decay per day. So this is one. If you do just one trade, maybe this could be it. $13 decay per day. Collect $500 a day. That's good. That do this 20 times a month. That's $10,000. Okay. You do need $8,000 in buying power. Okay. Let me show you. Buying power is $8,000, but if you do just one, even if you do just one, for example, you collect 123, but your buying power went down to 2,000. Okay, so this maybe you wanna start with like you put, I don't know, $10,000, double that on margin, 20,000, one trade, collect 123 for $2,000 buying power. If you do 10 of those, not the same one, like 10 different trades that have at least the theta will not be $10 a day, but because you have one contract, but still to get $10 a day on 8 ATR, it's future tradings and strangles, so you can sell puts and calls on the same side, which we'll get to. It's also on the sticky note. Okay, so that's an example, something to consider. Now the next one I want to show you is Intel. Why did I pick Intel? Let me show you Intel. Okay. So, okay, and Intel is right here. Now, to do Intel, I did the sticky note. We moved on. The next sticky note says, Tasty IVR sell 8 ATR puts for over 100 IVR. Now, remember when we talked about Dollar Tree and IVR over 100? Over 100, you collect tons of premium. Super, there's an event, there's like earnings, all that stuff. People are gambling, and the sellers of the options collect more premium. So I went ahead and searched. I went here, and I went to Tasty, and I went to Tasty IVR right here. And from all those choices, I picked Intel. Why? Because Intel, you see here, 89.5 IV rank. Let me show you this. Okay, right here. Let me show you this. We got IVR of 91, give or take. So that's 90. Yeah, that's a lot. Earning coming up in a few days on the 31st. And you got a squeeze coming up in here. Okay, it's a possibility of squeeze. So, I mean, it's up to you if you want to do it or not. I just remember that Intel went down from 30 to 20 in the last earnings, and now it's like 23. So a trade option that you can do, you can consider doing, is selling the 18 puts, okay, which is 28.7% away from here. I'm not saying I've done this trade, but this is a possibility to consider from all those trades that I'm considering for the day. The day is still open, and collect, you see, let's see, 10 contracts, collect $370 today with a decay of $10 a day, $10.52 decay per day, make almost $400 when risking $8,000 in buying power. Now, as long as Intel stays above 18, which is another drop of 30% from here, you should be good. Now, if Intel goes down below 18, and it was already 30, like, I don't know, 3 months ago, maybe if you think to yourself, okay, 10 contracts, $18,000, yeah, I'll get a sign and maybe sell cover call 20, 22, whatever, and start the wheel. Okay, if you look here, we are, you see, Intel was below the green line, that 8 ATR Kettler channel which is a lot, and now it's above the green a few weeks later, which means, yeah, they need to go back to mean reversion, which is the 28 as of now. It changes every day. But basically, if you buy long-term stocks from under the green, not for a day, for like long-term, around $20 in here, yeah, it's a safe, not safe, but interesting purchase, okay? Now, I've changed the settings and all that, but that's a different video. So as I said, a very simple concept, over 90, over 50, but for this specific, the IVR, I'm looking for over 100. This is interesting. That means the 18 is right here. See here, it's under the green, which is already 8 times the expected move. It needs to the rubber band theory. It means it needs to shoot back up to the mean reversal to the middle around 28, which also can go down with time. But if it doesn't, collect like what we said, like $400. Now I'm a little hesitant because this is in the red, which means a squeeze coming up. Now this squeeze could go to like up or down. I don't know. It's not up to me, and it's not 100% sure. See here, this was red, and we got a drop from 34 and all the way until the squeeze ended to 30. And then we did another red, which was at 20 and ready to squeeze back to like 21. So not all the time, but yeah, something to consider. Okay, let's move on. And the next one that we've done is liquidity high option volume 8 ATR for the monthly. What does it mean? You go here, tasty work, liquidity high option volume. This is what I'm looking at. And you see here, I've done the IVR, went over all of those, and just I'm looking at either this over like 100 or so, or I'm looking at IVR percentage, and around like the first page, 90, 95, like everything above 90 is a put selling or option sell machine. Basically, a lot of premium. Okay, so it says that's just another basically watch list to go and check it out. So what I've done, the next one, let's see what I've done here. Mark, okay, Mark is a pharmaceutical. The price is 104. The 95 put 10% away from here. Collect 244. How many contracts? 2 contracts with 5.7 bucks theta decay per day. But your risk is 5,700. So you have less risking buying power and collect almost 250. And if Mark doesn't drop another 10%, which is a super big pharmaceutical company with a high IVR, then yeah, you collect the premium. So if you click on Mark, for example, I want to show you the data. You see earnings, it says here October. In a few days, there's earnings basically. Okay, it doesn't show me stuff, so I'm just waiting. That's okay. Okay, that's one trade. I need the tasty work to wake up. Let's continue. Snowflake. Okay, look at this. This was a crazy one. Price today for Snowflake 118. Sell the 90 put. 90 put 31% away. So you got a lot of options based on the trades. A lot of options to play around. 30% away from the price today. Collect $300, $310. 2 contracts, $6,300 only is in buying power for December expiration. Almost $10 a day theta decay. And this is not a financial advice, but should be safe. Nothing is safe. It can go to 0, but this is interesting trade. Okay, so this is loading activity. Let's see this again. Interesting. Okay. Why is it okay? Let me check for something. So if you look for snow came from this tab. Go over watch list, IV percent change over 10%. Right here, sell 10 ATR. So I'm looking at this column right now, and if there's a move of over 10% which means the average, I don't know, IVR, how do I explain the average implied volatility? The volatility move up over 10% on average in the last 5 days. That means the options are now more expensive. Now I go over all this. How do I find it? I go over all those watch lists. For example, Mag 7, it's not here, but just for example, you see here IVR. You see here it's down for the on average for the last five trading days. And if you go over, I don't know, let's go over Tastyworks, and we go to bet watch list. For example, I think this is where I found it. You go here. You see, okay, you see it 10%, but something like that, okay? But this is futures or stuff like that. I'm trying to find you a good example. Let's Tom's watch list. I think it was right here, but it's kind of maybe it changed since then. Okay, but for example, JD was like 10% before. See, so I'm looking at this price, and as long as it's over 10%. And I know the stock, I'm gonna look at this. You see here, 11%. Here's the snow. I just need to look up. Okay, so snow, $117. But look at the change, 11.8% change in the IVR in the last 5 days. So nothing happened with the stock. The stock report earning on December, which is a month and a half from now. Basically, like I don't know, 30 days from now. Nothing happened except the IVR went up from like here, from like 35 to 58. This is a jump. There's no squeeze coming up. No specific reason. And that's why I can capture, if I decide to take this trade, I can capture the 90 put. Look at this trade. If you go to trade, okay, the 90 put, okay, now it's 300. Well, I could have done it for 310. Two of those, two contracts, theta decay of almost $10, 9.6, okay, 300 profit, max losses if Snowflake goes to zero, sure. Buying power affected, I like to be around 5,000, 6,300, and collect $300. Collect $300 a day, and the Snowflake needs to go down to $90. Okay, $90. We are to almost 30 bucks from here. If you click here, curve, okay, if you change this to curve and you click analysis, okay, no matter what, you made a 300, and this is like right now. If the price right now goes down, yeah, you're in trouble. But if the price right now, I don't really know how to do the analysis. There's a lot of tabs in here. This is a super friendly platform, but with insane amount of stuff, basically. Spot price, you can say ETF, let's say at expiration. You can play around with this. You know what? Let's actually play around with this. So let's say December 12th, for example. Effective date, you see here, the December 12th. So now, okay, where are we now? I don't know. But I know, okay. But I know, why is it all red? We jumped, 2024. Effective date, not 340 days from now. January. So let's, no, I mixed it up. 12/01, okay? December 1st, there we go. Now this is all profit, so let's assume it jumps in time, and let's say we are at like 100. It's getting there. It's getting there. The price is 90. Expiration December 20. So let's jump to December 18, just 2 days before. And of course, you can sell the trade, close the trade before, but you see here, you still profit $300 even if it drops to like 90, but 2 days to expiration. And if not, yeah, and you got so much time decay. This is beautiful. There we go. But the end conclusion for this specific one is that you have 30%, 31% of downside cushion. Collect $300 today that you can use as you please, but you just need to put the buying power collateral of 6,300. Now, if this was Robinhood, you'd have to put two contracts times 90. That's $18,000 collateral to make 300. This is $6,000 to make 300 compared to 18,000. So that's why when you sell option, when you sell puts, I prefer to use Tasty Trade instead of Robinhood. Robinhood is for yield max and round hill, different series. The next one, okay, next one is Dell. Price today, the same thing. Same thing. This one is gold. I'll go over the watch list. Not financial advice. IV percentage change over 10%. Sell 8 ATR puts. I'm also selling the 8 ATR puts, which is right here. So the Dell price 122. Sell the 95 again. Same thing as the Snowflake. 28% downside cushion. 2 contracts will yield you $250. $8 theta decay daily. Same thing, buying power that you risk is 6,650 for December. Okay, about the same thing as the Snowflake. If you don't have a lot of buying power, it's up to you. Maybe pick one of those, maybe do one contract, maybe do nothing, maybe just learn. At this point, it's up to you. So this is something to consider, okay? So this, I really like this one. They go over all the watch list, IV percentage change over 10%. Let me show you Dell. Okay, let me show you Dell right here. Okay, and Dell right here, let's go back and it shows you the details. Dell right here, you see here, 10% change. Let me show you how it looks exactly if you wait for the data. Let the data populate, okay. If you see here, first of all, you see the Dell is right in the middle, it doesn't go anywhere. I don't really know anyone that, like people that trade. It's not Nvidia, you don't trade Dell every day. But this is all you need. This move, spiking average IV percentage in the last 5 days, this move from 30, 31 to 48 means that the income that we can collect as a premium seller is a lot more than what we should have collected based on history. So that's good. You see here the ATR is 5 times 8 is 40 bucks is 80 in here, but I'm not gonna do the 80 because the 80 for December is probably, yeah, you see here 15 cents, 40 cents, you know. So I could have done the 85 if you want. I went a little higher. I don't think that Dell will drop, I don't know, 30%. Once the earnings again, December 5th, sure, I can close it before. 89% pop, $8 theta decay a day, and you can close the trade whenever that you want. Tasty Trade, if you watch the shows every day, they they aim to close the trade at 50% profit or start managing the trade at 21 days to expiration. 6,000, 6,500 give or take buying power, collect 240, okay, 244. It's not gonna go crazy. You're not gonna collect 250 now and tomorrow it's like 10 bucks. It just doesn't work like this unless the stock moves higher. If the stock doesn't do anything, yeah, it will go down 8%, $8 a day. 30 days from now, that's 250 or something. Close the trade. As a Tasty Trade, if it goes to like 120 or something, they made, as I said, 50%. They closed the trade. They moved on, and they released the buying power for the next trade. Okay, so that's another trade option idea. Now this one, I'm just gonna show you the sticky note. Sticky note. This is I'm not gonna do. I just put it on the Excel. I will do those once I will have portfolio margin, which is the goal. The goal with portfolio margin, just an FYI, is to sell, is to have a lot more buying power. 6.7 times the margin compared to 2 to 1. So let's say you have, I don't know, 200K, because you need 175. Let's round it up to 200K times 6.6. You control over $1.2 million in buying power. That's one thing. Sure, it's super risky, and you can go crazy with that and lose everything. But another, there's a lot of stuff that I will talk about portfolio margin once I have it. But at the end of the day, if you sell a put far out of the money put option that is over 15% away from where it is now, okay? If it's over 15% away from where it is right now, you can basically, the buying power is nothing. It's like, I don't know, like less than $1,000, something like that. It's absolutely negligible, nothing, absolutely nothing. That's how you can sell put options on Costco, Eli Lilly, and whatever. And also the big guys, like let's say Microsoft. You see here so if you go here to the sticky note, I'm just gonna show you sell dip in the money put lips 13 delta 1 per day from the forever stock list that I have to buy my stock on portfolio margin. This is why I'm not doing that, but I just put on the Excel so you can see. So the price now, just so you can see, Microsoft 428. You sell the free 20. You sell the free 20 put lips for December 19, 2025, a year from now, like I don't know, a year and 13 months. The buying power right now on a regular margin account is almost $10,000. That's why I will not make this trade. But if this was a portfolio margin, this would be, I don't know, because it's over 15% drop. See here, 34% drop. And if the market crashes and Microsoft goes down to like 300, yeah, I'll get a sign. I'm okay with that and do the wheel. Collect $800 as of now if you have a portfolio margin. $800 collect as of now. $3 a day, theta decay, 285. That's fine. $3 a day. Do one per day every for a month. That's good income. But the buying power is the problem, and this is why I like to do I aiming for portfolio margin. Why? As I said, if this is over 15%, the buying power requirement is nothing. It's like $100, $300 compared to like 10,000. We're gonna do this live once I will get to that point. So that's something, and this is just on one contract. And there's a lot more things to do on portfolio margin. But selling deep in the money puts, okay, on stocks that you love to own in the future, in case the market crashes, yeah, I'll take this trade any day because this is yours. The $800, if you do this trade, this is yours now. That's income. If Microsoft drops 30%, yeah, I'll take the assignment, sure. Let's move on. XLU. What is XLU? I'm gonna show you in here. Forever ETF list. Sell 2 ATR every day for every week after 1 per day. Okay, what does it mean? It means that I sold this one. I haven't sold. I put it in here on the Excel before I've done anything. November 22. Sell 2 ATR. You go to XLU. I have. Let's go to the Forever list. Forever ETF, and I have 5 that I picked. That I like. People do the wheel. This is my version of the wheel. I got VTI, CRE, which is all the regional banks, XLU, XLE, which is utility, and this one is energy, and SMH, which is the semiconductors. Okay, and every day I sell 2 ATRs. So the one that we picked for now is which one I picked? XLU right here. 2 ATR because this is here's the trade, but I'm gonna show you in a second. Okay, it needs to populate again. But 2 ATR basically because it's ETF. It's not gonna move 8 ATR as an ETF that controls I don't know how many companies, maybe 30 or something. But you see the ATR is 0.9, so 2 ATR, let's say 1.8, let's say $2. We're at 81, $2 is 79. IVR went up. Okay, this is way overvalued. A lot of people bought the utilities. Everything went up, but utilities, for some reason, utilities should be a defensive play in a normal market. We are not in a normal market at all when everything is up 50% plus, like it's water. So you see here, it's above 8 Kettner channels. That's a lot. That's a lot. It needs to correct. Yeah, I don't know if I'll take this trade now. I haven't paid attention to this. I just paid attention to this. But something to consider. But if you do, a 2 ATR will put you at the 79 mark, which is right here. And if you do the math, 79 but I don't do this for December. I do this for like every day. I pick 1 week after. So this one, let's say for next week. This one, if you start now, 2 weeks from now, 3 weeks from now, 4 weeks, 5 weeks, and then the circle starts again. Basically, so November 22, this is where my cycle is. Basically, you sell 3 of those. The 79, the price is 81. You sell the 79. This is a utility ETF with a dividend, and basically you see here the theta decay is almost $10, 9.6, $10 a day almost. Collect $280 if you do this trade, and the buying power is 4,700. Pretty simple. Less than 5,000 buying power, 2 ATR. Sure, this seems a bit risky because we are way over the 8 Kettler channels. If we just go back to the Kettler channel, is 79. The rubber band is 71. It could go up or down. It should eventually come back here. Doesn't mean it will come back here tomorrow. It could come back here, I don't know, in a year or something like that. But something to consider. I prefer to take trades when the stock is around the blue line, not at the top. Okay, and if you sell options, sell puts, sure, I can sell naked calls, but I'm not doing that. Just FYI. But if I do get a sign at 79, I just do the wheel. That's all. I do the wheel and I sell cover calls, because at the end of the day, you have 3 of those, which is $25,000, give or take. But not give or, yeah, a little less, 23.4, something like that. Anyway, but you collect almost $300, 280, $10 theta decay per day, less than $5,000 buying power. That's a solid trade in my book. It's not solid until it closes. And that's it for the trades for the day. Trade ideas. Now, if you see here, you go to CL, and we got $200, $500, 370, 250, 310, 250. Let's say we ignore the Microsoft, another 250 in here. So we got 500, 800, 1050, 1400, 2000, almost around $2,000. Now, for those $2,000 that you collected today, that is your money, you need to have buying power of 8,000 here, 8,000 here, 8,000 here, 5,700 here, 6,000 free, 600, and 5,000 in here. So maybe first of all learn about this, but at the end of the day, maybe start with one contract and pick something, and maybe do this is small, or maybe go for the 30% cushion like Snowflake that has $10 theta decay. Whatever you choose, learn about this, because people, when they sell naked puts on YouTube, they use cash secure puts on Robinhood. And as you see, if you just move to a Tasty Trade, I'm not saying move, but if you have an account with Tasty Trade, because I want to have Yield Max, I'm gonna start building a position on Yield Max on Robinhood. Why Robinhood? Because it's 25% maintenance, so the margin is like 4-1, which is insane. But that's just me. I like to risk. I like high risk and gambling, basically. So that's me. Don't just copy, just learn. Okay, but as for Tasty Work, the goal is to get to $175,000 in your account, and then I will apply for a portfolio margin. And this, whatever that you see here, all those 8,000, 5,000, 10,000, 6,000, will be reduced by like at least 80%. Okay, at least. And then that gives you a lot more cushion to do stuff. I'm not gonna go crazy and sell 10 contracts, no sir. But I will have a lot of peace of mind. I will also be able to do those long-term trades with Microsoft. Imagine instead of having 10,000 buying power, you need like 500. Okay, so the old saying goes: the more money you have, the more money you can make. So simple as that. More options you have. Okay, I'll see you next time.